Imagine a world where global commerce routes are disrupted, where the flow of goods between East and West faces a major choke point. American ships, once symbols of maritime dominance, may be forced onto longer, costlier routes as the Panama Canal becomes less accessible or too expensive. This is a real threat driven by environmental pressures and geopolitical maneuvering. The Panama Canal, inaugurated in 1914, stands as a testament to human ingenuity and a pivotal chapter in American engineering. For decades under U.S. stewardship, it became more than a 50-mile shortcut. It became the circulatory system of global commerce, handling about 5 to 7% of world shipping. It links the Atlantic and Pacific basins, supporting international trade for over a century by saving thousands of nautical miles and weeks of transit around Cape Horn. The canal became indispensable in global supply chains. Now, this vital artery, a symbol of interconnectedness, is at the center of a multifaceted crisis. Severe and prolonged droughts, persistent power struggles, and shifting international alliances are casting a shadow over the canal's future. The foundations of global trade, based on efficient and cost-effective maritime transport, are increasingly at risk. The most pressing threat to the Panama Canal's functionality is the escalating water crisis. Unlike sea-level canals, the Panama Canal uses a system of freshwater locks to lift and lower vessels. Gatun Lake, a man-made reservoir fed by rainfall, supplies the millions of gallons of water needed for each ship transit. Recent years have seen severe and prolonged droughts, caused by the El Niño weather pattern and climate change. In 2023, rainfall in the canal watershed dropped 43% below the historical average. By the end of 2023, the Panama Canal Authority reduced daily ship transits from 36 to 38 to just 22. The water level in Gatun Lake reached record lows, threatening both shipping and the potable water supply for millions of Panamanians. Faced with operational paralysis and financial losses, the Panama Canal Authority implemented drastic measures. Tolls increased, adding to transit costs, and scarce transit slots were auctioned to the highest bidding shipping companies. Projections indicate potential losses of $100 million per month. Without emergency interventions, the economic stakes are profound. The repercussions are global. Shipping costs have surged. Supply chains, already fragile, face further strain. The ripple effect is seen in higher consumer prices worldwide. Confronted with an existential threat to its primary economic engine, Panama is demonstrating assertiveness in safeguarding its future. In January 2025, the government approved plans for a new dam on the Indio River, a large-scale project to increase the canal's water reserves. This initiative faces controversy due to potential displacement of thousands and ecological impact on the region. Panama is also considering further transit toll increases and premium surcharges for vessels from or to specific countries, which could affect major users like the United States. The Panama Canal toll structure is a complex matrix, with fees calculated based on vessel size, measured by the Panama Canal Universal Measurement System, or PCUMS, the type of cargo, and the specific locks used. A Neo-Panamax container ship carrying thousands of TEUs can incur transit fees exceeding $1.1 million for a single passage. Additional charges apply for services like priority booking, mandatory inspections, and fees during extended waiting times. With persistent drought and increased competition for transit slots, costs for traversing the Panama Canal are expected to rise, further disrupting global trade. The crisis in Panama transcends economics and environmental concerns. It is now a prominent arena in the escalating geopolitical rivalry between the United States and China. The strategic significance of the Panama Canal, recognized since its inception, has taken on a new dimension in the context of these competing global powers. China's growing presence. Panama's decision to join China's Belt and Road Initiative in 2017 marked a significant shift, bringing substantial Chinese investment in infrastructure projects around the canal zone. Chinese firms have invested in the development and expansion of ports, modernization of logistics networks, and construction of vital infrastructure, including a new bridge spanning the canal. There have been proposals for a high-speed rail link across the isthmus. By 2023, the value of Chinese investment in Panama had quadrupled since the Belt and Road Initiative began, signaling a deepening economic and strategic partnership. U.S. pushback. Washington has viewed Beijing's burgeoning influence in its traditional sphere of influence with growing alarm. This has led to a concerted effort to counter China's expanding footprint. In early 2025, Panama withdrew from the Belt and Road Initiative, widely seen as a response to U.S. pressure. The Panamanian government also began a comprehensive review of contracts held by Chinese companies operating key port facilities. U.S. investment giant BlackRock then acquired significant port assets from a Hong Kong-based firm with close ties to Beijing. This move was seen as a calculated effort by Washington to reassert American influence and limit China's strategic access to the canal. Both the United States and China understand the dual strategic value of the Panama Canal as a critical artery for commercial trade and as a source of military and geopolitical leverage. The United States remains the canal's largest user. American cargo volumes far exceed those from or to China. Beijing is the second largest user and a major investor. This economic interdependence and competition highlight Panama's delicate balancing act. Caught between two global giants, Panama balances national sovereignty and economic interests while managing intense external pressures. Its dollarized economy and lack of a standing army make it vulnerable to U.S. and Chinese policy shifts, complicating its strategic decisions. Recent decisions, such as the withdrawal from the Belt and Road Initiative, and the promise of unimpeded passage for United States warships through the canal, suggest a discernible tilt towards Washington. Chinese investment remains a crucial engine for Panama's economic development. Beijing is unlikely to concede its influence without a sustained and disruptive response. As the operational capacity of the Panama Canal diminishes due to water scarcity and transit costs rise, global shipping companies are actively exploring and implementing alternative routes and strategies. The Suez Canal remains the primary alternative for East-West maritime trade. However, it has its own risks, as shown by recent security threats in the Red Sea and the impact of past blockages, highlighting its vulnerabilities. Circumventing the southern tips of South America and Africa, Cape Horn, and the Cape of Good Hope offers a traditional alternative, but with significantly longer transit times and increased fuel consumption, leading to higher greenhouse gas emissions and making it less environmentally sustainable. The gradual opening of Arctic shipping routes due to climate change presents a potential long-term alternative, but it is risky due to unpredictable ice conditions, underdeveloped infrastructure, and significant environmental sensitivities. Certain sectors of the global economy are shifting away from reliance on the Panama Canal. United States grain exports to Asia and liquefied natural gas shipments are being diverted to alternative routes. Immediate consequences include longer shipping times and higher transportation costs, increasing uncertainty for global supply chains. China is investing in new port facilities and railway networks across Latin America, aiming to create alternative trade corridors that could bypass the Panama Canal. The Chang'e Port project in Peru is being developed as a major transshipment hub designed to facilitate the movement of goods between Asia and South America, offering a direct Pacific route that could reduce reliance on the Panama Canal. The situation in Panama is more than a localized crisis affecting a single waterway. It is a microcosm of the interconnected global challenges of the 21st century. It intertwines the impacts of climate change, the need for economic survival in a resource-constrained world, and the dynamics of great power rivalry. Decisions in the coming months and years on transit tolls, infrastructure investments, and international alliances will have profound, lasting effects on global trade and the geopolitical landscape. The fundamental questions remain. Will the United States and Panama forge new terms of engagement that address evolving realities? Or will China continue expanding its influence in this strategically vital region? Will Panama navigate great power competition while safeguarding its sovereignty and securing its long-term economic future? Or will it be compelled to align more definitively in what resembles a new Cold War over global trade? This is not a temporary disruption. It marks the beginning of a new, uncertain era in global commerce, one characterized by increased volatility and the need for greater adaptability. What are your thoughts on this crisis? Should Panama use its position to impose higher excess fees? Or is this a larger geopolitical game with greater stakes than just economics? Leave a comment below to share your perspective. Like this video if you found it insightful, and subscribe for more analysis of global trends. Use hashtags like Panama Canal Crisis or Global Trade Shift to join the conversation online and share your insights with others. Explore our other videos for more coverage of related topics. Thanks for watching.